So again, like I said, I'm starting the video again. Like I said, I wanted to go over MAs, introduce MAs, which is moving averages, pullbacks, and structure of the market. All right. And first thing I want to do though, I want to show y'all my trade that I took this morning on why it is very important for us to wake up early in the morning during that London session. All right. This is why a lot of times when we get up at 7 o'clock in the morning, when we get up at 7 o'clock in the morning, we don't have a lot of trades when we talk and stuff like that. You got to kind of let the market settle or finish its maneuvers and whatnot. And last night, I set this up last night. Let me blow it up a little bit more for you.
Now, am I supposed to see on your screen?
You cannot see my screen?
No.
Carl, can you see my screen?
No.
Okay.
No screen. I see it now.
You see my screen?
I see it.
Okay, Rosemary, try to tap on my on the conversation. You should be able to see my screen.
No, I don't try.
You don't see it?
No.
Alright,
I don't see the little thing at the top.
you don't see the little thing at the top? Which thing? Which?
I bring you in now. I can bring you in. I'm just clicking on your, okay, I'm clicking in on your photo here. Okay, I can see you now.
Okay, good. And you can see my mouse moving, everybody?
Yeah, I do. I see it.
Okay, cool. Sound like you're a little tired, Carl.
I am. I got up and I did stuff you're getting ready to go. I did see this morning.
Yeah.
I went back to sleep. So
I know. So let me explain real quick this trade what I did and why patience. I thought today would be a good time to tap on patience. I actually set this up last night. From I don't know what time we got off last night. I don't know. That's the thing. It was about maybe 8, 9 o'clock. I don't know. I was looking. So around the time I set it up, and I was saying that I noticed that the market was playing off the previous. Let me get this out of the way. First, let me get this out of the way, and let me get volume out of the way because I don't even want y'all to get on volume yet. Volume is a whole nother course that we're gonna have to just really crunch. But I need y'all to get this first. So I noticed that it was playing off, if you notice, it say the PDL, which is the previous day low. Let me crunch this up for y'all. If you notice, I have the vertical lines separating the 24 days, they session breaks. You can see up here, this would have been the previous day high of this day. It comes all the way down. It stops. No more low for the day. So this is the previous day low. You see how I did that, Rosemary? Very simple.
Yeah.
You got the high, it didn't make no more highs, so obviously this is the high of the day. It made a low, and it made no more lows for today. Now it did dip down. It did dip down the next day, but that's not what we're looking at right now, right? This is the low of the previous day. So when we was looking at charts and we was discussing what was going to be the class today, I was noticing that it was playing around the low of the day. Like, notice how it came down, dipped down, quickly snapped back. So what is this, Rosemary? That's a fake out, right? That's not really a low, right? They're not holding the sales right there. You see that? It went back up into this zone. Matter of fact, What do we always say? A's in session, sideways motion. What do we have? Right? We have a range. So if a range is coming, something big is coming. Right? Now, what I did was, this line that I have here, Rosemary, see this line coming down? It's a simple trend line. I'm going to get rid of it right now, and I'm going to put it back. It's a simple trend line. Before, in fact, let me do this. Let me just start a little bit before. I'm going to put this back. This was the previous day high. All right, previous day high. We got previous day low. All right. Now, let's do this. Around about this time is when I was looking at the market. So let's cut that off. All right. So, so the market is right here. The market is in the Asian session. Done finished the New York session. Around about here. Pushed into the Asian session. And the Asian session, we know, usually give you a sideways motion. Alright? So, we noticed previously we have a what kind of trend?
Down.
It's a downtrend. We know it's a downtrend because if I do a if I do a trend line and connect the hits, what is going on? I need to plug up my I might have to plug up my my mouse. Wait a minute, y'all. Give me 1 second. Give me 1 second. Give me 1 second, y'all. Y'all kind of talk amongst yourselves for 1 second.
Yeah, Rosemary. So you on Nadex now, and you trying to do your trades and write your contracts?
Yes, I am. As I was saying, I got up this morning. I was looking at the market. I took the first trade about 3 this morning, 3:18.
Oh, you were up that time anyway. Yeah, I was up. That was a good time. Yeah. So you saw a trade and you.
Well, the thing is, I was saying that I was telling Brother Puma, I have probably some out there. I did take a couple, but I've gotten out. What I did is I took them at that time, and rather than do them for I think it was 7, I just went ahead on and did to the 11. Just give me time to look at it and ponder and whatever I want to do with it. Because I plan on keeping a lot. And I saw it both 2 of them was getting up to my goal of just by 80. I'm looking at it anywhere between 60 and 80%.
Okay.
What I paid. And so it had gotten there, and I wasn't for certain how long it was going to be. So I went ahead on and got out of the trade.
Okay. In Nadex, one of the things we noticed that the settlement in Nadex is kind of an illusion. You don't want to get in a trade with the idea of I'm going to settle. If you settle because along the way you see signs to stay into settlement, that's one thing. But to get into the trade and say, I'm in it because if it's 11 o'clock settlement, I'm going to stay until 11. That's a bad habit. So you don't want to do that anyway.
Right.
So when you get in a trade, you got in because it was a good entry and it looked like a good trade. So then you monitor the trade when it's time to get out. If you're supposed to make, I'm going to say $80 off the trade, you spent 20 for it and you're supposed to make 80. And it it looks like it's going to not act right, but it's paying $50. Take the $50.
Right.
In other words, you got 3 contracts. You were supposed to make 240, 3 times 8, 3/8 of 240. But now it looks funny. You take with those 3 contracts the $50, which is $150. You still did good. Don't worry about closing. So that was a good thing. Don't even think like that. Think about closing as something that proves itself along the way. If it doesn't prove itself, don't think about staying in the contract just to close it.
Well, right. I hadn't planned on staying because what I'm going to be doing, as I said, if you read the thing, more than likely I'm going to be a scaffolder.
Okay.
Oh,
okay.
And so I will have to be doing several. I just give myself that leverage, which I know will be paying less for going out that far, I guess. But it just allowed me to look what I'm doing, study the other things, and I don't have to be pressured within an hour or 2. On some of them I'll get in at the last minute, but
that's right. That's right.
That's the time to do what I need to do and come up with some things.
That's right. That's right.
Right.
Yeah. And like I'm sure you said, the settlement is an illusion for real. So you don't never have to wait that long. Matter of fact, I actually like taking money. I think yesterday we had a trade where we was gonna make $157, and I think we ended up taking $120 something dollars. That but look, Rosemary, we still had 40 minutes to the contract.
Right.
We had made that $127 in like maybe 30 minutes because we still had another 40 minutes left to the contract because we try to do an hour and a half, 2 hours of time to give us some time, but we still have 40 minutes left, and for me that is a huge victory because we made money in a shorter time, and like my dad like to say is we could sit back and learn while we got paid. I thought that was real cool, you know what I'm saying? Because you can sit back now while everybody so riled up, oh, am I going to make this settlement and stuff? You done already made the money. And you can say, okay, well, is it going to keep going or whatnot? I could have probably settled on this one. Oh, well, da. You have the actually option to sit back and watch the war from the sideline while you done already got paid from it. So, I mean, for me, stuff like that, even if I'd have made $10 and let the contract go, you know what I'm saying, I got an hour left and I done made money off it. I mean, that's a victory for me. So it's all on how you look at it. If you was just to be very disciplined and say, I'm not even going to go through no settlements. I'm going to wait till I get about 50-60% of what I'm supposed to get and exit every trade, you will probably make a lot of money, and you will probably not lose a lot too, to be honest with you. I mean, that's just how that's going to work right there. All right, but it's all on. The settlement is part of the trick. The settlement is part of the trick for sure. You see. So back to what I was saying though. This trend line here. You see how I got this trend line? Simple trend line. I got it. When you go over to your drawing tools, I got the trend line. It's the very first one. All right. And what I did was I went from point to point, and you're gonna want to run it to where it hit at least 2 points. And when it hit 2 points, you're gonna want to just run it through, straight through. All right. A lot of times it's not gonna be perfect. A lot of times you might have to do stuff like this to get a good reading, but you're gonna have to, like I say, you're an investigator, so you're gonna have to investigate your charts. All right, some stuff. So, but just for now, I'm gonna just take the wicks. You see how I did that, Rosemary?
Yeah, so you're getting the high point.
I'm getting a who?
You see the high point.
Yeah, I went from the high point and I hit the point, right? Boom. And then 9 times out of 10, I'm anticipating the market to make it back to this point again. That's why I say 1, 2, run it through. 9 times out of 10, if it's a valid downtrend, the market is going to continue to go down in this channel. You understand? On this little trend channel. Because if I put another little one right here, you would do it like this.
So you can elect to go the trend from the highs or the lows.
Well, if it's a downtrend, you're going to want to go from high to low. If it's an uptrend, all right, look at this little uptrend right here. All right?
Mm-hmm.
Look at this little channel. 1, 2, run it through. All right? And then take this. I probably would start here and I will run it through. So now look, if you look and if you look, let me blow it up a little bit for you. So look, that was up. This one is down, but let's do with the up and then I come to the down. So with the up, if you look, it goes up, it hit the channel, it comes down. It don't even touch the channel this time, but it goes up. And look, it touches the channel. This is an entry. It goes up. It hit the channel. This, at least this would be a target. Because if it hit the channel and don't break through 9 times out of 10 like before, it'll probably fade away and fall back down. You see that? If you go to the downtrend, which when you look at it, we got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Where's the higher highs anymore? What does that mean, Rosemary?
Well, we don't have any more higher highs than
Right. They're failing to make those highs, right? So since they failing to make highs when they was making highs anymore, are they starting to make lows now?
Yeah.
Yeah, right? So boom, there you go. Now we starting a downtrend again. So now we have another channel. The market kind of plays around with this, boom, then it bounce off. Comes back to it, bounce off. See what I'm saying? Comes back to it, bounce off. So it's in this little channel and then it actually opens up more and hit this. This is an entry. Because you have a valid downtrend going on. Look at what kind of candle it gives you at that entry. You see that?
Right.
No,
that's indecision.
It's an indecision candle. It's a whole bunch of stuff. It's an indecision candle for one. If we was to look at our entry type stuff, this is an isolated high, right? It was running up, having problems. Okay, now look at what's going on. It was running up in a overall downtrend, and then it started having trouble right at this area right here. All right? We know it's having trouble because it's not closing above. Right? Isolated high, it closed. Even if you want to be safe to wait for this, you still got a good entry to make it all the way back down to this, at least to this entry again. I'm trying to see who that is. Hello? Hello? I'm not sure who trying to call. And it might be Vernon. Oh, okay, I see. That's my fault. Connect. Wait, 1 second, y'all. 1 second. We put Vernon on. He must have sent me the message when Let me go look for the. Oh, okay. Brother Vernon. Y'all still on? Rosemary, Carl?
I'm still on.
Okay.
Yeah, I'm here. I'm still here. How are you?
Okay. All right. So, 1 second. Let me make sure. No answer. All right. So let me just continue. All right. So right. So we see the change of carry, the boom. Right here, when it hit this trend line, all right, it gave you a reversal. And like I say, even if you wanted to be safe and wait for this, see how this closed, the isolated low? I'm sorry, the isolated high on an already down swing. This right here would be a great entry. Where there's wick, where they bought into it and failed, to come all the way down to this point, at least to this point here, and then you would have to see how the market reacts to this. And it did break through. You see that, Rosemary?
No, when you went off, let me see if I can click this off. Now you have to see when you're answering the phone.
Oh. Carl, you couldn't see my screen either?
I see your screen, but there's no movement.
Well,
Yeah, I could see it.
Well, yeah, look. This is my screen.
Okay.
But, yeah.
Yeah, I see it now.
Do you have Brother Vernon and Johan on?
No.
Yeah, I'm still.
No, that was Brother Vernon trying to call.
I see where it says you're answering.
Oh, look. Let me see. Brother Vernon. We might have a connection now. There we go. Brother Vernon. I hear something. So, and then let me do this, and I'm gonna share my screen again. Brother Vernon, you can hear me?
Hello?
Yeah, Brother Vernon.
Yeah.
You on? Peace, brother. Peace.
Peace.
Sorry.
I probably gonna have to go on audio because I'm on my hustle. So I'm probably gonna have to. I'm sorry, on mute.
Oh, that's cool. That's cool. No, do your thing. That's cool. Just and then I'm recording it too. So.
Okay, that's cool. What's up, everybody?
Hotel. And then hotel.
Brother Carl, he's back.
Good morning. I'm here.
Good morning. All right. So I'm gonna go on mute. If you can mute me.
Oh, that's cool. No. Mute your side. Just put the mute thing on there, so that you can still hear me. Cause if I mute, y'all won't hear me.
Okay.
All right.
Sounds good.
Now, cool.
All right.
Cool. All right. So now I'm gonna come back to sharing my screen. Share my screen. All right. Y'all can see my screen.
Yeah, the screen is back up now.
Cool. All right, so and again, this is recorded for all those that couldn't make it, so it's all good. We dealing with trend lines right this second. So as you can see, we gonna make this simple now. This shouldn't be a complicated thing. Like I said when we started, this was an uptrend that obviously ended because we know it ended because it ended up in a range, right? Who is that? Hold on 1 second, y'all. Hello?
Hey, what's up?
What's going on, brother? Peace, What's going on? Let me call you, and so I could. Oh, you want to get with the group?
Yeah, yeah.
Okay, let me call you and put you on. Go ahead and hang up.
Okay, cool.
All right. I should be back on, right? Can y'all hear me? What's going on? What's going on with that? Okay. All right. Can y'all hear me? Hello.
I can still hear you.
Okay. All right. Let me.
Yeah, I hear you.
Cool.
I hear you too.
All right. So let me go back to what I was saying. Let me put Brother Johan on. All right. Brother Johan.
Yeah.
All right, I got part of the family on. Everybody gonna quickly say hello.
And we'll tap you on.
Hey, hold that, family. Hold that.
Very good.
Yeah, how you doing with the Rosemary?
Hey, what's up, Rosemary?
Mm-hmm.
And I got Brother Vernon on too, but he's gonna be muted, kind of in and out today, cause he kind of doing something else, but he wanted to join the session, so he's on. And true, cool. And basically what I was doing, real quick, I was showing my trade that I took this morning and the importance of why we should be up on the London session time. But what I'm doing, I'm kind of getting to it, and so what I'm showing Rosemary and everybody else is trend lines and how to make it more simple. So what I was showing, we have a little minor up right here. It pushed into a zone, a sideways zone. No more highs with new lows equals a change of character. We have a downtrend coming. Right? And as it goes down, it verifies itself every time it goes down. It comes up and it hit this channel line right here. And like we get into now, Rosemary was describing that this is like a reversal type maneuver right here, which is very true. Right?
I'm not seeing your screen right now.
Everybody else can see my screen?
I'm seeing it.
You seeing it?
Yeah, I see the screen also.
All right, Rosemary, it's something with you. Something going on with your screen. Just keep kind of fiddling with it. I'm gonna continue on. It's recorded for you, so but keep fiddling with it. It's on. It should catch it.
Maybe you can click on his name. Maybe is that?
Yeah, you might have to click on the name again. So anyway, and just let me know, Rosemary, if you can't get it, then we'll just, we'll halt and try to get you back on. But like I say, anyway, entry, quick scout to at least come back down to the channel. All right, because look, what's cool about this is, oh man, listen, y'all don't. Okay, hold on one second. Hold on. Hello.
I can hear you.
Did you just call me?
I don't know what I just did. Go ahead.
All right, everybody else is still on?
Yeah, I'm on.
What just happened? Okay, Brother Carl, you still on?
I'm on, but I don't see anything on the screen.
Okay.
Yeah, cool.
All right, cool. I'm gonna put it back. I don't know what just happened, and I see Vernon still on. So, do y'all see my screen now?
Yeah.
Yeah.
All right. Okay.
Nah, it's there. I see it.
All right. We good. We good to go. All right. So, real simple. All right. Like I was saying, real simple. We see that change of character. We see it coming down. We see it establishing a channel coming down. All right. We talk about patience today. We talking about pullbacks, and we talking about structure. Because I'm seeing that I'm seeing that that's some of the problem that y'all having, the patience part. And most of the patience part, I'm gonna tell you. Sometimes 9 times out of 10, y'all come into the chart and it's looking like this, and it might have went down. Let's do this. It might have went down, and right when you looking at it, you saying, yeah, that's down. Yeah, we good. Oh man, I need to go down. And 9 times out of 10, you doing just like everybody else, and you selling way too damn low, right? And what happens? Market start doing something totally different from what you needed to do. It's because you didn't get the structure of what's going on. And the second thing is, if this is a valid down move, if it's a valid down move, then what goes down has to come up. That's what's called a pullback, right? This is where we get our lower lows. And Rosemary, if we have a lower low, then it need to have a what? Lower high in order to make another lower low. So you have to wait for the pullback. Consider the pullback like this, as a discount on what you want to do. If you want to go down, right, then say, I'm not going to get in right here. I'm going to wait for it to pull back, because every trend has a pullback. It will not be a trend if it don't have a pullback. And it will not, and the market would not just go straight up and straight down. It have to pull back. Consider the pullback as a discount. Well, if that's the case and you want to get in right here, wouldn't it be better to get up at least right here where you see it's having trouble making the high and get in right here? This would have been way better than getting in right here. And at least you could come from here to here, because this was already established.
Sorry, is this a 5-minute chart?
What happened? No, this 15 minute, Johan.
Okay.
Yeah, 15 minute. Yeah. So even from this quick scalp, right? You boom, you see this? You see they tried it again, the bulls, because this is a green candle. They actually tried no more highs. This is an entry right here. I mean, it's not a lot, but guess what? That's money being made because you know where it's going to. And you can easily exit right there if you wanted to for 18 pips. And that's on a small scale. That's just from knowing the structure of it, right? But that's from knowing that I should not get in when I see it already stretched down to the low. It's just like on the other side of it, if the market is going up, let's do this. If the market is going up, right, and it's verifying that it want to go up, then I don't want to buy it right here. That's way too high. I needed to convince me that it still wants to go up some more. So why not wait for what? A discount or a pullback. You see what I'm saying, y'all? Rosemary? This your discount right here. This your pullback. Right? Let's look. Let me show you what I mean. I know you remember this, right? Because you've been studying your videos, right? We got a move up. It did a pullback. Let's say you wanted to make sure that it's still doing some good ups. Well, in order for me to know that it still want to go up, I needed to knock out this high right here, right? And when it knocks out the high, I'm going to wait for a discount. I'm not going to buy it right here. I'm going to wait for a discount, which is a pullback, which is, in this case, your higher low, to get in so I can ride it up, at least till I can see how it acts to this high. Because I know it's going to want to at least test the high. And in this case, you would see that it probably blow right through. 9 times out of 10, you want it to blow through. You don't want it to hesitate too much. If it hesitated, it probably still would blow through. But if it looked like it's having trouble and it's giving you them long wicks, then look, this is your target. From here to here. This is your target. And 9 times out of 10, if it's selling pressure coming in and buyer pressure coming in, the market going to do what? goes sideways. And you don't want to be caught up in the sideways range. So your money is being made from the discount to at least to the high. And of course, you know, like I said, you see how it acts when it gets to this point. Because why? Here come another opportunity coming up again. So what is the 90% doing right here, Rosemary? They're buying. They're buying when they really should be what? Waiting for a what? Discount.
Yeah.
Exactly. You see how that works? Boom, 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 boom. Right? And of course, as it go up, what happens? It makes a high. Now we testing lows. Did it make highs again? We're having trouble. We're having trouble. So what that means is buying pressure up to the top, selling pressure to the low, to the bottom of this. We have a sideways motion. And for us, sideways motion means rub your hands together, lick your chops, because something big is going to happen. It pops out. You get no more higher highs. This is a fake out right here. Even though this is higher than this, if you notice, if I was to draw a line right here, imaginary line going across, all this is a fake out. It went, quickly pinned back in. This would probably have a wick. Went, quickly pinned back in. Went up, faked them out, got them to buy into it, quickly pinned them in. Trap traders. Right? Now we don't have no more highs. Are we getting lows? Boom. Lower than the previous low. But we don't sell right here, Rosemary. Right? We don't sell right there. If we really wanted to get a sale, we want a discount on this sale. Let it prove to us that it's going to make another low. So as it makes another hit, a pullback or a discount for us, or potential discount, but it is a pullback. As it go up, it don't make a higher high. It don't even reach this point. Nevertheless, trying to make another higher high. But you see, it fails. 9 times out of 10, you're going to get what kind of candle? You're going to get, man, what was that candle we just saw? You're going to get something like this. Right? Or you're going to get some kind of formation like this. 3 candle formation. You see that? Right here is where you're going to get that. So with the discount, you know that you can enter right here and at least have your first target where, Rosemary? Right here where the previous low was, where it can knock it out. Right? That's your first target. Your second target will be somewhere, well, if you notice, if you notice, your second target would be here. And I know this because if you look all the way to the left, it's the same exact spot where this was support and resistance is turning into support and resistance again. So that's your second target. And then, of course, every down got to come up. So here come your pullback. So maybe you might not want to continue on because you done made so much money from up here that you might say, let me get out of here. No matter how long your contract is, no matter how far distance you're trying to go, if you made enough money, then your job is done. Let everybody else deal with it, all this other stuff. But let's say that you missed all of that, Rosemary. Let's say that you missed that and you came to the chart and it was right here, minus all of this. Well, when you look back to the past, right? When you look back into history of what happened and you see that this was an uptrend, zoned, failure to make highs, it started giving us lows, lower highs. I'm now at a new lower low. 9 times out of 10, the market is going to do what? Test the highs again. If it don't break the high, then I'm probably going to get the same thing that I told you we're going to see right here, right here. So you have to wait for it. If we was on an hour chart and you saw the market right here, then guess what, Rosemary? This might be 5-6 hours before it get up to here and bomb out. You know how much patience you got to have? That don't mean sitting there looking at your chart for 5 hours because you will go crazy. I promise you. And I don't want you to go crazy. What you have to do is set it up. 9 times out of 10, what's going to happen is you're going to get to the chart. You're going to see this. You're going to see it low. You're going to allow all the 90% to sell into it. You're going to watch it actually turn its pivot. And then you're going to project on where it's going to go to find out if buyers are really showing up. Now, here come my question. And this is how I know if you're studying or not. Where was buyers previously at? Where was buyers previously active? Can anybody tell me that? From this point right here. Can anybody tell me that? Because I might be babbling. Y'all let me know.
Unless somebody else answer that.
Rosemary, you know the answer, Carl. I know you do.
You say where were they what?
Where were they active at previously? Does point now. If we came here and we saw the market turning up, if we was looking to the left, where was bulls active at? Like, for example, bulls are active right here. It pushed it up. Bulls are active right here. It pushed it up.
Right.
Aren't bulls kind of active right here?
Yeah. Green, for the green one.
Right. So look, as the market goes up, you have support where bulls showed up at, turning into resistance, right? And they failed to show up. They did show up before, but this time they fell in to show up. So as a projection of where you think the market is going to go to check for buyers, it's only right to look what buyers were before. Does that make sense? So if that's the case, Rosemary, what I'm saying to you is, you would put a line from here to here, and you would wait for the market 4, 5, 6 hours to make it all the way up here to give you some kind of information. This is now your information station. And if you remember your SNR video, you have support that get broke by a big candle or a nice little trend going down that turns into resistance. Very, very heavy level right here. This is why the market went down right there. All right. Let me know if you didn't understand that, because that might have got a little deep for you. Rosemary?
Oh, go ahead.
Okay. All right. So back to the chart. Back to the charts. Back to the chart, right? Let me go to my trade this morning that I took, and then I wanna well, like I say, I did want to introduce the MAs to y'all. Okay. Where's my mark? Oh, I erased the markings. All right, so this morning I took a trade. This morning, Johan, London session. I got in right here around about. It was about 3. I want to say about 307. But my entry was right here, and I'm gonna explain my entry and everything.
Was that London open?
London, yes, sir. This is why I wanted to show the importance on why we should probably be up around that time, even if we don't get a trade. You dig what I'm saying? Even if we don't get a trade, it's probably good for us to kind of, after a while, in the near future, to have our sessions a little earlier, because we know that London session is going to bring a lot of energy to it. It don't run right away, y'all. It don't do it every day like that, but for the most part, come London session, you're going to get some trades to come in. Sometimes it might not be 3 o'clock in the morning. Sometimes it might be 7 o'clock. Like it's kind of doing some stuff right now. But all the way down to this. But this morning, like on a regular, the market gave him this at 2 o'clock. Pushed him up. What's that, Rosemary? FOMO candle, right?
Mm-hmm.
Right? But this is what I want you to see about this FOMO candle. This is how you know something funny is going on. Let me cut this off right here. Let me cut this off right here. Well, let's start right here. Start right here. Start right here. All right. And I already see we're in Asian session. They building a motion. They building a motion. Right? They probably gonna build a motion all the way to about 3 o'clock, I would think. So let's just run this to about 2:30. Oh. What's going on with these mouse? 2:30. Let's just run that to 2:30. All right. Again, like I said, I have the previous day low. So remember these vertical lines is the session breaks, the 24-hour session break. The previous day, this is the low for that day. So you can really see them playing off of the low. They're not wanting to go any lower. They must have met their quota for that time period and they got to reset. But now, this is going back to what I was saying before. Every down has to have a what, Rosemary? Has to have a pullback, has to have an up, right? Right? So if I'm looking at the chart right now, why would I sell at this point right here? It's way too low. I could already see that money been made for somebody, and it ain't me, right? So what I do is I set up, and I know I have to be patient. Where would I look to see, where would I project the market to go check for buyers where buyers have showed up before? Right? It's a couple of ways you could do this. And we like to add confluence with it, you know, add as much confluence as possible to make sure that you got the right angles and stuff. One way you could do it is Fibonacci. All right? I don't know if y'all writing this down, but it will be taped. Fibonacci. Fibonacci is basically calculations of previous support and resistance. Right? Let me go back to the tools. I went to my drawing tools. I went to the drop down and I went to fib retracement. I'm getting that. All right. It's basically recorded data of previous support and resistance. So a lot of times, you know how I told y'all manually to always look left to see where your support and resistance was previously. Well, the Fibonacci kind of helps you out right here, right then, where you don't have to do that if you don't want to go back. So with the Fibonacci, if I'm looking for a pullback on going down, right? I'm looking for I'm on a downtrend, obviously, because I have these two channels. So we coming down, and you can see where the market, oh, that's the Fibonacci right there. Wait a minute, guys. Let me get that. You can see where the market is inside this channel, and it's not breaking out of this channel. So 9 times out of 10, we got to know if the market comes up to this channel, which is one of our levels. This trend line is nothing but a diangular resistance to this point, right? Then I know inside of this channel we still going down. And even though the market look like it's going up, I can't be fooled to think that this is an uptrend unless it breaks this channel. That makes sense? Unless it breaks this line, I can't be fooled to think that this is going to be a up trend. You see? It might just be a pullback, right? So what I do is I already have this right here. Now watch what happens. I'm going to take the Fibonacci and I'm going to go from what is called the swing high, the previous swing high. This is the swing high right here. I'm going to take it, I hit it, I drag it down to the swing low, which is right here. You see how that's the low? I hit it from the top, I drag it down to the swing low. I drag it over, right? And you will notice that the Fibonacci have these different lines in it. You have 0.236 percentage of a pullback, 0.38, which is like 38% pullback. You have a 50%, because 0.5 would be 50% pullback, and 0.618 pullback, 0.786, and then on, right? It kind of reminds you of the running man that we do, right? If you look from here, when the Bears striked up their Nikes, he run. Rosemary, how much would you say he rests right there? He runs hard, but he rests right here. Would you say about what? Maybe 10 to 20%?
About 25.
About 25? Look at this. 0.236. And you said 25, which is good, because that would be right here, something like that. If he would have ran a little bit more, he would have ran about 38%. So it's kind of like our running man. All it's doing is basically gauging the momentum of the trend and stuff. And like I said, it's doing recordings of previous support and resistance. All right. For us at KTG, my dad and I, we only pretty much mess with the Fibonacci retracements until it gets to the 50 and the 618. And the reason that is because if it reaches up to the 50% and fails, that's a pretty high probability trade that the market is going to resume its trade. Its trend. In this case, it's a downtrend, right? So what we would do is we will mark off this little area because it's in the middle of 50 and 61%, right? Now, this is the thing, Rosemary. If the market made it past 618, if it made it past 618 and is holding the buys, it's a good chance that we might be on the uptrend. You see why we picked the 618 and the 50? Because if it passes the 618, true indeed, it might reach that 786 and still fall down. But it's a good chance if it's holding buys past this point right here, that it's now we're on the uptrend. We probably seen a change of character, making no more lows and holding they buys, right? But in this case, we going down, so we got the 61, the 61% or 62% if you add that 8, and 50%. All right, so I'm gonna get rid of this because I already marked off the area where I need to be. Now I want you to notice something before I go on. When we talk about confluence, we talk about adding the evidence or the data that you're recording to convince you that this is really going on. Well, notice I have the channel coming down, right? And look where the channel meets up with my 50% and 61% retracement. Already that's a confluence right there that's saying, hey, this might be a spot that a pullback, instead of me selling, a pullback could happen, and I probably could get in on a good trade going down. You with me so far, Rosemary?
Okay.
All right. Now, the second thing I would do, or third thing I would do, I would add on to my confluence because I have time. The market not up there yet, and I'm not going to fool myself to go down. If it fell down from here, I wouldn't even take it. I wouldn't take it because it's not high probability, right? I needed to come up here, and if it don't do what I wanted to do, then I don't do nothing. I have the choice to do that, right? We not letting the market trade for us. We trading the market, right? So I need the market to come up here, and I needed to do a dance up there, and I needed to fall. That's what I kind of wanted to do, right? I wanted to now look, it's not gonna be perfect all the time, but this is what I need. I needed to act like it want to do this in order for me to even think about me doing anything, right? Now, another thing I would do is add more confluence. Where previously did the bulls show up that the bears would want to check if the bulls are really going to be there again? All right, it would be right here, Rosemary. You see here, they showed up. This is support. They bought. All right. If I look to the left, 9 times out of 10, this is a little area right here. You can even do this. You can do this. They was right there, but I actually like this a little better. I actually like this a little better. Let's just deal with this right here. Let's just make that a regular line right now. All right, and of course, I would like to check it to the left. It's nothing to the left, so I ain't gonna worry about it. So let's do this. Since I already got the box there and its confluence, let's go ahead and take this middle part right here. Where I see these, this, and it's doing this. And if I turn this on, probably got some wicks in there here. So that's cool for me right there. That's actually pretty good confluence because you got a nice bird nest. You got, obviously you have bulls showing up here because they was rushing down and the bulls pushed them up. So all of this is buying pressure. And another thing I want y'all to know too, when y'all put these lines, that don't mean that that line is going to hit that line perfectly. Sometimes it do, sometimes it don't. But that don't mean that it's going to hit it perfectly. What it mean is it's a zone. And the zone could damn near be this big. Matter of fact, this one is. Because this is all buying pressure. Right? So just because I got the line here, it don't mean that's what it is. It could actually come up in here. That's why you got all this 50. It could come up in here and not hit the line, but do the dance up in here. And then fall down. Because it's actually a zone. Alright, I just wanted to make that clear. Alright, so that's the third thing. I got good confluence going on. I got a Fibonacci retracement. That's saying that the market could meet up right here and then pull down. Alright. I got this channel line that if it break, well, of course, if it break and it come back and test and go up, then it'll be going up. But if it come back down into the section again, that's good confluence for me to get an entry to go down. All right. And of course, we got the support that might turn into resistance. All right. But again, this is at 8 o'clock last night. We have to have patience. So let's see what happens. All right. Uh-oh. Oh, that's what I'm looking for. I want to pause it. I want to pause it. God damn it. I didn't mean to go that far, y'all. I'm sorry. Damn it. Alright. That's okay. That's alright, y'all. Alright, so look what happened. Let me see if and see if y'all get focused. Good. Okay. So, like I say, it wasn't perfect, but it did what I wanted it to do. Within the time, this is 8 o'clock when we analyzed it. It did its thing. I went to sleep around that time because I wanted to wait to see. I set my alarm clock around about 2 o'clock to see what was going to happen during London session. So the market did some stuff. It actually went down. Remember when I said if it went down right here, I wouldn't take it because that's not high probability. And even though that's a nice little run, it's a nice little quick run, and it did run to that thing, I still probably wouldn't have took that. Because I need the market, even though it didn't make it up there then, I need the market to at least test this area. Now, notice this, y'all. Look at this candle. The biggest candle out of this whole section. That's a big old FOMO candle. All right? Not only is it a FOMO candle, but watch this. How many people right here got their orders right here to go up? And how many people think it's going down got their orders right here? And this is why I said I would not take this, because it's orders right here. This one candle swooped up and took everybody orders on this, in this ranged out area. This is how I know the trick is happening. This is how I know they're going to test my area that I needed to test. It goes. Wow, Rosemary, look at that candle. Then I say in the pullback, you're going to get them to start felling. And now you're starting to get one candle. And if we talk about effort versus results, right? Look at the effort of this big old candle. You would think the next candle should be a huge green candle. It wasn't. It was a bearish move. At the area, and it get right exactly in my area, but at the area where you want it to start happening. All right? Another failure, basically. Boom. You see that, Rosemary? That's what you want right there. And of course, you're not gonna just jump in. You could jump in right there, but I like to wait for even more discount. So since I'm on the 15, I would have went to the 5 minutes. If I go to the 5 minutes, it's actually gonna destroy everything we got. Not the drawing, but it's gonna take us to where the market is now. But I'm gonna show you on the 5 minutes. I wait for a pullback on the 5 minute, and it's gonna give you this. See that wick right there? I know on the 5 minutes it did this. Boom, for 5, it went up, and quickly snapped down. You want to be right here. This is your entry. So this was my entry. At about, like I say, 3:07 in the morning. Right? Right on London change. Now, my first target was here. And you definitely need to see what's going on here. But I'm not too much worried about here because I know this was a trick candle. Alright. So let's just let it go. So the entry is there. Market swung past that. Pull back again. Hit it. Boom. There go my first target. Now, I want to say I exited this around about 4:15. So it might have been around that time. Because when it hit that target, this is where I exit, right here. No, I'm sorry. 4:15. It was about 4:15, 4:17. So in this candle, maybe right in the beginning of this candle. No, it was right here. Right here. This is where I exit. So this was my exit. And like I was telling you, from 3 o'clock to 4:15, I was done for the day. That's why we need to wake up during that time. Even if we don't get a trade. 9 times out of 10, if we was to wake up, if y'all could condition yourself to wake up 4 days out of the week to meet that London session, I promise you, you'll get about 2 to 3 trades out of there. 2 to 3 high probability trades. That's what we going for. We're not just trading for the hell of it. You want high probability trades. You see what I'm saying?
What time it is for you guys in London session?
The London session for us, well, Eastern time, because I got different people. For Eastern time, it's at 3 o'clock. So for you, you have to figure that out. But London session start for us at 3 o'clock, 3 a.m. Eastern time. So that means for Rosemary, since she's on, I think, Central time, it will be 2 o'clock. What time is it now for you, Rosemary? Okay, yeah. So it'll be 2 o'clock, Rosemary, that the London session will open up for you. Right? And Eastern, Vernon is Eastern. So 3 o'clock. And what I'm saying to you is not just to wake up at 3 though, or 2 in your case, Rosemary. Not just to wake up, and Johan and Carl know this, but to wake up a little earlier or do what I did, set it up the night before. Because you don't want to just jump at it right at 3 o'clock because things might just start happening. And it's going to trick you and you're going to start trading with your emotions. But if you already got it set up like how we did, right? You kind of in your mind you saying, man, this is what I want. I don't want nothing else. If it do something else like it did here, which I'm keep looking at, this is an okay trade. This was the fruit of the move right here. I just want to take it because I just know the trick coming, you know, and that's just me though, right? You could have seen this and said, well, I know what's going on. It's not meeting this to this top channel. Let's get rid of all this first. Let's say you didn't do all of that. Say you didn't do all of that, right? And you say, man, I'm not waking up 3 o'clock in the morning. I don't feel like waking up 3 o'clock in the morning. Well, look, you got the channel. Boom, it bounced off. It's not even reaching there. We already on a downtrend. Do you see this right here? All of this is a reversal maneuver. It's pretty much the same thing like this. Big candle, big candle. What is that doing? Inducing buys, right? Failure. You would think with this big candle, you'd get another big candle. But you didn't. You got a failure. They tried, failed. They tried, failed. They're turning the shoulder. Is this not a good entry, y'all? Boom. You see what I'm saying? So even and you say, okay, I want to enter here. We're on the 15 minutes. I want to enter here. I want to at least make it to the bottom of this channel. I ain't want to move it too bad. It didn't even make it because I can see it pass. But look, it stopped. Boom. Once you start seeing the turn, you get out. I'm out. I'm done. I don't even want to make it for the 3 o'clock. But you got to know structure. You have to know structure. And you got to know what you're looking for too. All right. Wow. I kind of thought I was going to go through that kind of quicker than that. That was my trade this morning. What I wanted to do was introduce MAs to y'all. Moving averages. And some people use EMAs, which is what is that? Exponential moving average.
Exponential.
Yeah, exponential. To be honest with you, and let me clear all of this. To be honest with you, I guess from our observation, I don't know what anybody else would tell you. It seemed like the EMAs and the MAs are the same. I mean, they calculate a little bit different, but they pretty much the same. I don't see no huge difference in them. I don't know. Maybe Johan, do you see a huge difference in the EMAs and the MAs?
The EMAs are more sensitive. The MAs are more not over, but more like more like they're not so in and out. But the EMAs are more like you can use both, but the EMAs are more quicker.
Okay.
So you'll see a change in them more quicker than the MA.
What do you use? You use EMAs or MAs?
I use MAs, but I don't know if you remember CMAs. I use at very different times. I use 9, I use 10, I use 50, 100, and 200.
Ah. Yeah, because you do long term too. So yeah. I dig that. But
if I do that same thing with the EMAs, the lines won't be the same place. So maybe the EMAs will be closer to the candlesticks or
Yeah, that I do kind of remember that where it'd be like look like it's calculating a little bit more closer to the candlesticks.
Right.
Yeah.
Right.
Well, for now, what we're gonna do is we're gonna do MAs, and we're gonna do. I don't want to bombard y'all with stuff. I'm gonna just keep it simple, but it's good, right?
It's so good. And the 250 are really good.
The 250. Well, see me, I only use the 50 and the 20. Only because I know I'm doing quick strikes and stuff. We doing quick strikes and stuff like that. But the 200 for overall and to know what's going on. Yeah, I think the 200 is good. Maybe one day, if Johan don't mind, we could have him to explain some of his strategies on those EMAs and MAs. And the thing is, what I want y'all to understand is y'all don't have to trade like Brother Tumray, or you don't have to trade like Brother Carl or Brother Johan. Or you understand what I'm saying? Rosemary need to figure out her thing. We giving you the tools, but you can kind of take from everybody's style. That's pretty much what people do anyway. And you need to get it where it fits for you. You see what I'm saying? So just because I have 2 MAs, and sometimes I will put up a third one, depending on what I'm doing, you might have, well, my dad only used 1. If I'm not mistaken, you still using 1?
Yeah, I only used 14.
See? Whereas, huh?
That's all I use.
Yeah, that's all he used.
So you cooking out then?
Quick in and out. That's what he doing. Quick
Yeah.
in and out. Yeah, he ain't got the patience like that. He see it, he run with it, he go. And that's cool though.
Run.
Yeah, and that's cool. That's cool. Whereas Johan got, a couple of them because he's bouncing around doing different trades. And too, well, y'all will find that out. Different markets move differently. So, you're gonna wanna acclimate your chart to what's going on to whatever market you on anyway. So, but for today, excuse me, for today, let's just deal with the 2, and we're gonna put Rosemary. We're gonna put a 14. You can change the numbers how y'all want, but for now, we're gonna put a 14, and we're gonna put a 50. For now. And then later on, if Johan don't mind, maybe on a later date, that he could show us some of his strategies on the EMAs. On the different ones. Maybe you know what I'm saying. Maybe they might want to put a 200 or a 100 or whatever I know people who put 21 on there. I don't know why, but they'll do it. 27, 28, 59. I don't know why. But they do it, and whatever worked for them, it works.
I don't know what you mean when you're calling out those numbers.
I know, Rosemary. It's okay. So look, this is what we're gonna do. This is what we're gonna do. I want you to follow my lead, but you probably gonna have to write this down because I'm on my screen. You're on my screen. So the first thing you're gonna do is you're gonna go up to your indicators. Right? And I just like to put moving average. You're gonna get the regular moving average. This is the moving average, the EMA right there that we was talking about. But for now we're gonna do moving average. You click moving average. Right? And it should bring up a line. You see that line right there?
What automatically knows to do that?
What happened?
Automatically knows to do that.
How do it automatically know to do that?
No, I'm saying it automatically does that.
Oh yeah, it automatically put up for you. As soon as you click the MA, boom, it'll put one up for you. Once you got the one, you'll see the line. Right? You're gonna want to click on that. Make sure you got the bubbles on there so you could know that. You picking that, and right click. Oh, I'm sorry. Bubbles. Right click on the line and go to format. Right? And first thing you're gonna do is put the input. Your length for this one would be 14. Alright, and you're gonna leave everything else. You're gonna leave it from the close, which means that it's recording the close of the past 14 candles. Alright, so it's recording the close of the last 14 candles of every set. So every time 14 candles come, it's recording that for you. And it's giving you the data, the line, every time of that recording. So that's what those numbers mean. The 14 is recording 14 candles. So in this case, we're on the 15 minutes. It's recording 14 15-minute candles. And it's coming up with that average that's making that line for you. All right. You go to style and you change it to any color that you want it to. Mine usually is red, the closest one. Boom. Done. All right. Then you go back to your indicator and you're going to grab another moving average. Same thing. M. Moving average. Click it. Move that out the way and another one going to pop up. All right. Click on that. Right click it. Format it. And input this time is going to be 50. Like I say, it could be 200. Let me show you a 200. A 200 is going to do that. You see where the line went?
200 is my best friend.
And I see why. I mean, that's what I'm saying. We about to make it real, try to make it real simple for y'all. Right? The EMA, if you look, right, just imagine. And it's a 15-minute chart, y'all. Just imagine. If we saying that the market makes high lower lows, lower highs, right? Lower lows, Rosemary. Do you sell right here? You can? No, you don't want to.
Well, first you're going to go by thinking that it doesn't going up and coming back down.
Well, you know that because if it's making lower lows, lower highs, lower lows, it's probably going to make another lower high to make another lower low. But if that's the case, though, right? And again, you remember, you don't want to sell low. I'm going to keep saying that. You don't want to sell low. That's too low.
Sell high.
You want to sell high, yeah. So if it's low, my mind automatically, even though it is on a downswing, it's too low. I'm thinking up, y'all. That's just how I'm wired right now. I'm thinking up. It done fell too low, even though it's on a downswing. Now whether I take the trade or not, that's something else. I probably wouldn't take it here, but if it came back to test it right here, I probably would have took this one. I'm sorry, right? And that's going against the grain on it, y'all, on the heavier thing. But what I wanted to show you, I didn't want to go far. What I wanted to show you, we know this on the downswing, Rosemary, because why? If you look at your EMA, what is your MA, your moving average, the blue line? What is it doing? It's going down. So as long as this is going down, your 200, this 200 right here, this is an entry. This was an entry. This was an entry. This was an entry. Still going down. So this is an entry. Oh, we still going down? What is that? Okay, we still going down and we down here. Then I know I should wait for a pullback and this could actually be an entry. Why do I say that? Because they're going to check for buyers to make sure they come back. Buyers was there before. Buyers not showing up. It runs down. It goes up. Oh, we still down because of the EMA? Now notice this. Notice how the market comes up to test the EMA. The moving average is nothing but a floating information station / S&R, support and resistance, or level. Let me say that again. The moving average is nothing but a floating information station. Notice how it kept floating down, letting you know it's going down. Sometimes, a lot of times, you get the market to come and actually test the moving average. If we go deep into this right here, to that particular part right there, you can actually see where they put a manipulation move on the EMA. You see that? See the big M right there? Bow. Failed to make a high. They tried it. It's actually making a little low, but they're going to test it again. Failed to make another high. That's what makes your M. This is like a support area. I know this is a level. I don't even have to look to the left, but let's just do it anyway. And bam, look. Buyers showed up here. Remember, I told you this is nothing but a zone. Buyers showed up. Come back. Buyers no show up. Bears take over. They push it down. Right? So your EMA, I just want to see something too. Wow, that's 85 pips right there in that one day. Off of that. So what I wanted to show you was the EMAs acts like a floating support or resistance. And a lot of times, depending on how close you have your EMA numbers, which means, like, for example, the 14 is really close to the candles, to the actual fight. See how close the 14 is? Whereas the 200 is pulled away, right? So just imagine the market on a downswing. The first time that it gets to touch this EMA, it fails. You got to know that this is an entry right here. Because if this was a regular support or resistance or a higher universe level, then you would have had an entry right here. You have to use this as the same thing. Huh?
Can you put volume right there also? Let me see something.
Okay.
Not to cut you up, sorry.
Yeah, no, you good. I don't do the sideways volume though. The OBV.
Okay.
That's what you was looking for?
Yeah.
Oh yeah, no, I really didn't get into the OBV. I will though, but I haven't. So I would have looked at tick volume on this. Tick action. Because if you because if you look, I know y'all this might be a little bit too much, but real quick, this one, and when it came back to test, you actually got some volume coming in with the failure. So if you look, you see this volume peaked up right here on the highest price at the time. I know sellers are coming in. It confirmed it because they pushed it down. They came back to test it, and now you see volume picking up again. You would think with this volume, it'll make some highs, but they fell. One more time, push down. Good entry right here when they tested it again. You see what I'm saying? And just put it down. But especially, oh my gosh. Oh, man, it's so much. For now though. A very good sign too. Look how the EMAs are crossing. It literally crossed with the 14. Remember, this is my 14. And it crossed with the 200. Damn, how strong is that, Johan?
No, really strong. Because on the 14 and 200, what happens is it calculates the previous 14 days times the new 14 days or the new 200 days. That's when you get these lines.
Right.
So it's basically a mathematical calculation. So it basically calculates, let's say you have a 30, it calculates the previous 30 days.
Right.
Times the future 30 days and give you these lines.
Right.
That one makes it not one of the powerful, but that one makes it powerful basically. So it gives you a conversation of where the overall market is going. That's why I love the 200 because the 200 tend to go okay.
Right.
The overall conversation is bearish.
Right.
And you can see it's bearish for some days now.
Right. You see how that got him? Cause I'm sorry. Go ahead. Anyone was speaking.
Yeah, I was just gonna. This is for Rosemary, and kind of blow it up a little bit. Just blow it up.
Blow it up.
There are people who only wait for that to happen.
That's right.
You could wait, and you see where the red line takes off from the blue line, where big MA and a smaller MA break off. Make it a little bit bigger because I want to make another point.
Okay.
If you actually waited until that happened, Rosemary, those are trades. If you patients, we talk about patients, there are people who only do that.
Right.
And they would actually make that trade.
Right.
Because that's what they would be looking for. When they saw that, they would get into the trade right after that red line broke off of that blue line.
Right.
But for Johan and the suit, when you look at it, if you look at that last green candle, take a look at that.
Which one?
The next.
This
That
one? This one, okay.
The next one.
This one.
That's your early entry right there.
Yeah, that is early.
Now you add those lines coming up because that's actually a well, we would call one of those supply.
No, I don't call it none of that. No.
Anyway, that's a low volume test off the weakness. So that would be an early entry for going in.
Right.
But if you're looking at your MAs would, when that red line broke away from the blue line, if all you did in life was wait for that to happen, you would get a probability of high volume trading, high quality trades.
Right. High probability quality trades. That's exactly right.
I just wanted to make that.
And that's why I'm showing this to y'all today. You might be that kind of trader, Rosemary. We not like, forcing this on you, but you might be that kind of trader. If you had enough patience, again, let me, I like to scrunch it up because we like to see the whole overall. If you was the kind of person that had enough patience to say, okay, I see, let me just take Johan page out of his book and say, okay, I see that it's a downtrend, right? If I'm patient enough to wait for the market to come and test this particular line, you might just have just the 200. That's what I'm trying to tell you. And it comes up to test it and it fails to pass it and actually hold. Because look, if it was going to be an uptrend, Rosemary, you would have got it to stop here and it would have did this. I might have to change the color and stuff. It would have did something like this. And then it would have did this. Well, if that's the case, what your MA gonna do? It's going to round around, and you're gonna start seeing it go up like this to let you know that you on the uptrend, right? Which means this would be green real quick. I don't want to throw y'all off. Well, that's cool. Y'all know what it is, right? It'll do this. This is your test. This is your test to this EMA. To this MA. It's not going past no more. No more downtrend. We are now on the uptrend because now you'll see it hugging it. But it didn't do that. Did it, Rosemary? It didn't do that. Right. Think about it. It didn't do that. It actually failed at your information station because this is a floating information station. And so that's the case. That means that we're still on the downtrend. Now, let me show you what's even cool about this. If you was even more patient, why not wait for the market to test the EMA again? It could be a couple of days, but look how high probability that it is when it do test. And you will have some information when it make it up there. We still on the downtrend. Who gonna tell you that you're not on the downtrend? The 200 is letting you know. No matter how it look right now. A lot of people say, oh, the market going up. Yeah, the market temporarily going up. But what's your 200 telling you?
Right.
What's your 200 telling you, Rosemary? Your 200 telling you don't fall for the banana in the tailpipe. I don't know. You understand? That means don't go up all the time. Unless you know what you're doing. Unless you know what you're doing. Right, yeah. Right. Unless you know what you're doing, you don't want to go up. Right? You kind of want to wait and be patient and do what? You want to wait for it to come and test it again. By the time it make it around here, your EMA might be right here. This is your information time. What do you care if you get 2 or 3 trades out the week? If it hit this 3 or 4 times out the week and you know it's high probability.
Right.
You make, depending on how you do your contract, you can make $100 every time. You can make $500 every time you get in. You can make $5,000 every time. That's 3 times out the week. Think about it. You see what I'm saying? So that's what make it easy. And so that's why Johan say, look, this is his best friend. Which I'm with him on that. So look, this is what we're going to do to help you out some more, Rosemary. Go ahead and write down in your notes 200. I want you to put the 200. Hell, even if you did 100, let's look at what 100 did. This is cool to see. So it's a good thing to go through. So go to format and let's put 100. Alright, so now look, how will we play this? Same thing, right? Just now you notice that the line has got more closer to the fight per se, right? So if you look, this is entry, but you would have had to wait for it to go, fake them out, and actually come back down to let you know that we're still in the downtrend. You see that, Rosemary?
Okay.
Look at this. This one you want to mess with because why? The market actually passed your 100. I would wait for it to come back and test. This is your test of that. Did it pass the test? No, because if it passed, it would have bounced off it and went up, right? The bulls actually failed. It came back down. Information station. We're back down to a downtrend. It actually came back to test it again and didn't pass it. Good entry right here. And we talking about pips now. If y'all want pips, I mean, well, thus far we at 78. You know what I'm saying? Just off of playing off the MA, the floating information station. Now, don't have other levels and stuff that conflict with your EMA. Look at this. Supply that. You got level right there. So let's leave that right there. And look, EMA, it tested the MA. It actually tests this level where this was resistance was before. It fails. Don't make any highs. It actually go back under the MA. So if you don't have a early entry in here, it gave you another chance right here, Rosemary. Let me blow it up for you. Get used to actually seeing the market like that too, scrunched up. I know you want to see the candles, but you need to see the structure of it. But as I blow it up, in that fight right there, what I was saying, of course, the market went up. Damn, this is actually an entry. Like I said, you have to know what you're doing. Because the market passed this EMA, this blue, the 200. Comes, holds the buys for a little bit, tests the sellers. Did it pass the 200? Let's say we didn't have this right here. I don't want to confuse you. Don't want to confuse you. Alright, we're just dealing with the 200. Again, like my dad say, people wait for this. Well, you might have been waiting for a while, and finally it hit you 200. But is it rejected? It rejects right here. It comes back to try it again. It's rejecting a little bit, but notice how it continues to keep coming. It don't turn his face down under the level. So the bulls are showing up right here. But let it convince you that the bulls are showing up, right? Range, break, test of the range and the MA. Did it make a low? Did it pass it, Rosemary?
No.
Don't you have an entry set up right here? Red candle, isolated low, close above the isolated low, entry. That's a little scalp right there. You see what I'm saying? That's playing off the MAs. And then it go up, of course you need to get out, once you do this, It's boom. It push away. You're gonna need to be looking to get out. This could be just a pullback. We don't know. But as it come and go up, it fails to make another high. You need to be getting out right here if you in the trade. Double tops.
Yeah, double top.
M's. I mean, whatever you want to call it. You know, I got so many signals saying get up out of there. But that's still a good trade though, right? Boom. But we know that the overall trade overall was down. So if it's really going to be a uptrend, it needs to be testing overall right here. And this is what this is. This is really a up and come back to try to test to see if the buyers are really, really about that life. Like my brother like to ask me all the time. You about that life? I dig that. Right? Look, the bulls didn't show up. It blew past the MA. Well, cool. We don't. Right. You see, making lows also. Boom. But look, we don't take breakouts. That's not what we do. If it's gonna break out, then let it prove that it want to be a down. It goes up. It tests the EMA again. It tests this area that we got previously. It fails. It goes back under. Right. Early entry here. Early entry here if you want to. Right? It falls, it's doing good. It's checking, not making highs. This is a superb entry if anybody wanted to be safe. Because why, Rosemary? It's not making highs. And look at your MA again. Back in formation. Ready to take you for the ride again. Until the next time that it tests again. You see that? So, I mean, even if you didn't have nothing on your screen, I mean, some people actually just trade off of that. But they masters of that, though. You can literally make a lot of money off of just MAs. Off the floating average. You see? So, I want you to add the 200. I want all of y'all to add the 200. That's on the video and that's the family that don't have the moving out. I want y'all to add 200. And I want y'all to add, for now, add 250.
Yeah, 250.
Yeah, for now. Because the 14, the lower numbers, they're gonna mess y'all up, right? Y'all got to know what to look for those. It's a reason why we put those closer ones. If you notice, like for example, let me show you. Let me put back the 14, right? Oh no, what happened? Okay. So look, the 14, look how close and tight the 14 is. I mean, that's 14 is doing 14 candles, whereas the 200 is doing 200 candles previously and 200, and they're guesstimating 200, an average of 200 in the future, right? So that's why it's so separated, whereas the 14 is right up on it. This will kind of mess y'all up right now if you was waiting for some kind of test from this. Because we do this, we put that on for a different reason. All right, even though if you notice, it's testing it. It is testing. Look, boom, fell, boom. It did, you know. There's other stuff you got to look for on that. So.
Can I add something really quick?
Yes,
about
yes.
the 200?
Yes.
Can you up the time frames like the before hours or daily?
Oh, go to the daily?
Yeah.
Okay. Alright. Zoom out or zoom in?
Out.
Oh, out. Okay. Right.
That's good. Like, this is one of the reasons why I like 200 so much. Because you can see, like, all this is the information, and you can see when the 14 and 200 crosses, that's a big deal.
Wait a minute. Alright. Okay. Oh, you want me to keep the 14? Okay, good. Cause you now you about to talk about the crosses though, right?
Okay, cool. Go ahead.
Okay, yeah, go ahead. I'll just leave it all up. Go ahead.
You can see based on the price action low, you can see the conversation. Now, adding with the MAs and adding the value, you can see where pretty much there's an agenda and pretty much where is the price. You can see basically for some deals, when it crossed in 2017, right after that low, you can see that from since that day, it's been bullish.
Boom, it crossed.
Low, crossed, bull run.
Right.
And we know to be a perfect bull run, I don't say perfect, to be a good bull run, it needs to be a test.
Right.
And that low is a test, right? Then it crossed again above. So you can calculate from that point to the high how much pips that is. And that's all what Brother Warner was saying. There's people who just wait for this. Like, that's all they do.
Right.
Because be like, hey, the 200 moving average is there. Look at this, look at that. And that's all they will do. That's all they will say.
Right here. That's a good point. Real good point. And then right here. That was a real good point, actually. Okay. Right here. Okay. So yeah, and that's damn. That was that was a real good point. All right. So like he say, if you look, what's cool about it is that I like about it that he just explained. Look at this. You can actually see them breaking out of that right there. Right? So emotion building up. But aside from that, like he say, some people literally wait for these crosses. And I don't know, is that a strategy to where it crossed 2 times like that?
Strategy. There's also
Oh wow.
Stop loss involved, how much percent and every other thing.
Okay.
But basically, what I know about the 200 average is it just basically calculates the previous 200 days, depending on your time frame, plus the future 200 days. That's why it gives you these lines or these dots, whatever you want to call it. That what makes this thing so powerful.
So look, the cross is a powerful thing. And what he's saying was, it crossed one time here, right? Boom, it went up. With every up, it need to prove itself to say that it really want to go up. What is it proving itself? It need a test, right? Remember, if we go back to the Fibonacci, went to my thing, Fibonacci retracement. Remember, the Fibonacci is nothing but the running man. It just helps you a little bit faster. I take it from, since I'm going up, I take it from the swing low to the swing high, and I run it across as perfectly as possible. And look, remember when I told you, Rosemary and Vernon and everybody, family on the videos? 50%, 618. I wouldn't pretty much mess with the other ones because it's not a high probability for me. You mark that off. And look, even on a big scale, you got the same formation. Ain't that an M? Failure to make lows. I'm sorry, W. Low. Failed. Instead of lower lows, it's starting to make lower highs. I mean higher highs and stuff. There, lower highs, higher highs. Again, as it make a higher high attempt, it tests. Look, right here, you got the cross like Johan said. Boom, the market rolls up. Now let's do the pips on that. If you would have got in, boom, right here, even if you got in right here, but this would have been an ideal spot. But let's just say right here. That's 531 days with no stress. No stress. No stress, just off of that. And that's on a higher time frame. And all we did was just fit our time, we fit our same system / strategy to a higher time frame. We acclimated to the time frame. Same thing. The market do the same exact thing. You see what I'm saying? And so you wouldn't buy it right here again. You wouldn't buy it right here, even though you saw the little, whatever, if you was waiting for that. You wouldn't buy it right here. You would wait for it to test. And how do you wait for a test? It's the pullback. You see? You can do the Fibonacci. The Fibonacci gonna give you the 50. Which what I would wait for. Boom. You do the swing. Since you're going up, you do swing low to swing high. You drag it over. I'll help y'all with this again. I know this might be more. Drag it over. You got your 50. Boom, boom. You mark it off. Get that out of the way. And you wait for the market to actually make it down there. And let it do what it do. You know, this is actually an early entry. If anybody wanted to be bold about it, this actually is a really, really good hit. That's a real, real good entry right there. That's like pro stuff right there, boy. That's it right there.
And can I add something really quick? This is just forex. Let's do something similar like the S&P, gold, or anything else.
Okay, I don't have S&P on my thing yet, but let's do cause I use Nadex for S&P. Let's do, you can do gold if you want to, or you go. It don't matter. You can do gold.
Now you can see this is the futures market, so the conversations are less noise, and you can pretty much see. You can go to the left, to the left, to the left, to the left, to the left. Yeah, right about down.
Let me get this out of the way.
This is company was back, but you can basically see that for a period of time it crossed and it just keeps going up. And these are the things. These type of guys who use the 200 MD strategy, that's what they do, and that's what they wait on. They will wait for days, months, weeks, you name it, just for this, and then they will just kill it.
Right, right. You see that, Rosemary? Look at the cross right there. And that's in 2006. I mean, like I say, they patient though. They know this is high probability. 2006, boom, that thing ran all the way up for a couple of months. But look, like you say, look at this cross. People would have waited for that. Look how long it's been going down. Here come another cross. It's a little messy, but it did make its way up though, didn't it? And so people, that's what I'm saying. People actually, they actually master this stuff. Now look, I'm gonna show you something what's real cool. Every up is gonna have a pullback. So above, so below. I got the Fibonacci retracement. We going up. Swing low to swing high. Drag it all the way across. And look, this one actually hit 786 this time. Powerful. Cause if it don't pass this 786 and then hold the sales, wow. If it fails at 786, that's powerful. That's gonna move it up. That's gonna bounce.
See, these are the conversations the big boys have. Like, let's say like how we just analyzed this. Let's say they analyzed it at 2016. So they will have the lines ready. They will have everything ready. The conversation is ready. When they say, hey,
right.
Look at this price, look at that, it's at 1200 or whatever. Hey, brother, it's at 1175, look at it, And these are the conversations we had previously.
Right.
So now these are people, there are people who entered at that low price.
Right.
And right now they're banking.
Right. It's a lot of people hit that, into that right there. And they haven't been out since. They in it. They still in it. It's all good. And this is all the way back in 2016, December. And we here now. No problem. And why do they know that it's not gonna fall? Look at your 200. It's still riding up. So they wouldn't panic when they see this coming down because it's gonna test this. And they'll probably get some information when it comes down. It'd be like, oh, it's bouncing up. Oh, more money to be made. Even though it is in a nice little area up here. But they've been doing this so long that I'm almost sure they ain't even worrying about it. They done made so much money on tricking people on thinking, you know, get them to sell so they could buy some more into it. Get them to sell so we could buy some more into it. It's a hot, you know what I'm saying, hot thing. Get them to sell. They go. Remember all the time, sell your gold. You need to da-da-da, this and that, so we could buy it all up. You know? Oh, sell your gold. You need to do this, so and so. Forget about gold, da-da-da, so we could buy it all up. Sell your gold, buy Bitcoin, da-da-da, crypto, da-da-da, so we could buy it up. We try to figure how the rich stay rich. That's it right there. By trying to trick us every time. And if we, you know what I'm saying, but if we go along their lines, it's something Johan always say. He say he have a hedge fund type strategy. He always say that. That's pretty good. I said, because he thinking like how the big people think. We have to think just like them. Just like them. We can't think like the 90%. Alright, so I didn't really get to go through everything I wanted to go through, but it's cool. The MA. You know what I want to do? Real quick. Rosemary, do you have any question on the MA? I hope you was writing down the notes. Cause you're gonna have to go on your chart and actually go on there. I help you with it. It's not a problem.
On the MA, you talked about doing 200 and 200 number into the format file.
Yes, ma'am. Let me show you. Like, see, this is the 200. It's got the bubbles on it. I just click right on it. Go to format, and then the length. Yeah, like I said. Well, that's not even a 200. Wow. Yeah, you just put 200. For now, let's just deal with 250 because I want y'all to use it as a guide to let you know what direction you in, not to be fooled. It's like a not to be fooled type thing. Yeah, don't do the 14 now. We're gonna get the 14 later, but for now, cause I'm gonna work with y'all some more on it so we can look and stuff like that. And then for y'all, as a homework, to go and onto your charts and actually look for the crosses and see the reaction after that. You know what I'm saying? Actually look to where the market makes it back to either the 50 or the 200 and see how it reacts to it. Remember, let it convince you. If it passes it, excuse me. If it passes it, then let it come back and test it. Look, it's not a good test. So I wouldn't go up on this right here. You see what I'm saying? And I wouldn't overly go down because I needed to come and test it back. This is not a good test. I wouldn't go down. See? It's kind of playing around inside this thing, which made me think that this is a range right here. Not days, candles. Yeah, not yeah. In this case, days. Yeah, days. But candles though, think of candles because even if you're on a 15-minute, it's going to collect the 15-minute data. So it's going to be 200 candles, 200 15-minute candles. All right. One thing I want to show. So yeah, so I want y'all to put that on your thing. Even if you got to go back and look at this video and see how I did it, just put it on your thing. Then I'll help y'all if y'all got any problems. One thing. Go ahead. The Fibonacci. The Fibonacci. I went to the thing, boom, and it's the drawdown. Fibonacci. It still was in my little thing because that was the last thing that I used. But it's Fibonacci retracement. Fib retracement. Fibonacci.
I remember now.
Yeah, if anybody know about math or anything, they should know a little bit about Fibonacci. Fibonacci, old white man. Let's just put it like that. Oh yeah. And then I don't know if y'all know. It depends on how good y'all is on math, but Fibonacci really would be counted like 1, 2, 3, 5, 8. 8 and 5, what's that? 11. no, I'm sorry, 12, 13 or something. How you do it is you count it. It'd be 1 and 2. 1 and 2 plus 1 plus 2 is 3. 3 plus 2 is 5. 3 plus 5 is 8. 8 plus 5 is, you see what I'm saying? You keep going like that. That's really Fibonacci counting right there.
But I know they're using a lot of them.
Yeah. They use it for a lot of different things too.
And also Fibonacci's like the God sequence. Everything in this universe uses the Fibonacci sequence.
That's what I was. Yeah, I didn't want to get too deep, but yeah. That is basically the yeah. That's right. Yeah, right. I wanted to show y'all something too that I don't want y'all to forget. To always check your announcements before you trade, especially before you enter a trade, because you will have your thoughts on what you see on the chart, right? But because you wasn't mindful of the news, it might have went the opposite way and it looked like it's about to be bad for you, when really it was news time. So if you look right here, 7 o'clock this morning, the GBP had a lot of news, a lot of heavy red, high impact news. You know, inflation, bank rates, all kind of stuff, monetary policy, all kind of stuff, right? But the thing is, they got 1, 2, 3, 4. Wait, 1, 2, 3, 4 news all at one time, 7 a.m. What?
It's crazy about it, and divided it.
And it's divided. What do you think will happen to the market at this time? We can see.
Right now, GBP/USD is a crazy bullet, so I think you're gonna get some settles in, and that would just add to the news. Basically,
it could be, definitely. Well, the news had already happened for us, Johan, at 7:30. So, because I know you got to kind of fit your time to our time. Right here, is 7:30. You see that? Ain't that something? So now look what they did though. It's about right here, all the way to about right here. All right, what's that, Rosemary? That's our famous what? That's right. I like to call it a motion builder. So for a whole day, 1 hour and 15 minutes, they played with people money and hearts and emotions for a whole day. Do you know people who don't have patience, how much they was squirming inside here? Think about it. So now what happens? You have orders from people who's impatient down here. And you have orders from people impatient right here that think the market is going to go down. You got people going down, you got people going up. In one 15-minute candle at 7:30, this is why I say we wait for the news to see what happened. Look what they did. Knock out all of these people to the left and even knocked out these people right here to come all the way up to where? A previous high where people swear that the market was going to flush down. So all quick like that. All in 15 minutes. You see what I'm saying? And it's 15. We on the 15 minute, but I'm gonna tell you, if I go down to the 5 minute, it probably happened in right at 7:30 in 5 minutes. Bow, wipe them out. Right at this time, if at 7:30, you got a whole bunch of people jumping out of their office windows. Unfortunately. All right? And so now, let's see what it's doing now. Get that off. Okay. So now, it's bullish. It's bullish. How do I know it's bullish, Rosemary? Just if we was looking at the EMAs. It's bullish for right now. Let's put it like that, because it was previously low, but it already broke your 200. I think I put the 200 back up there. And now you wouldn't want to buy right now. Why is that? Because it's too high. Why not wait for a discount if it really want to go up? What would your discount be? It'll probably be down to, well, we're on a 15 minutes, so this is your first line of defense. This EMA. Got to test that. If it passed that, then look how close the 200 is. Because by the time it make a turnaround or whatever, 200 will be riding up like this, maybe. And you got a testing area right here. If it fails to make lows, 9 times out of 10, the market going to rise up to the next level. Just off the EMA. Not to mention, y'all see that? I still got y'all, right?
Yeah.
Oh, okay. What's that, Rosemary? Not that. Not that.
I can't see what it is.
That right there. You can't see it? You can't see that cross? Then we just talk about the cross?
We talked about it, but I know that it's
Okay. I'm sorry, my dear. There you go. Can you see a little bit more?
I'm saying that the first one, yeah.
You see it?
Yeah.
So what is that telling us just from the information that we learned today from the EMAs? We got a breakthrough, got a nice strong breakthrough of the EMA. And already took these people orders and they rushing up. But we got a nice little cross here that's ensuring us that they do want to mark it up. But just because we see it don't mean that we are going to, buy it right now. We should wait for some kind of discount. All right. Where would a discount be? It would be whenever they turn a face down or whatever. It would be EMA testing. Another area. Of course, it would be previous structures, which would be this right here. So I'm more prone to think that it actually come all the way back down here, to be honest with you. You got too much confluence going on. You got support that used to be resistance. You got this big old breakthrough. 9 times out of 10, the market likes to find this kind of stuff, right? So they're going to try to convince a whole bunch of people that it's going to be on the sale. Now, if you know what you're doing, you can actually take a position up here, because you should know what goes up going to come down eventually, all right? And if it do make it down here, that's a nice little run. I mean, it's not bad. Good grief. Yeah, I mean, right? And then when it reached one of these areas where it fell, 9 times out of the 10, how it looked, if it acts right, it's probably going to want to knock out the high. That's another thing. And even if it goes sideways from there, we talking about 100. I mean, that's how you analyze it. Now, to say it's going to happen like that, I'm not going to tell you it's going to happen like that. I could just tell you that's projection. That's why I always tell y'all, this is my projection. But I always put at the end, if it acts right. Because the market could just continue to keep going up. I can't control it. Market just keep going up. Until it pull back, I can't get too much information. It's real strong. But as soon as I say, man, it's strong enough, man, I've been missing out, and I buy, what's going to happen, Rosemary? They're going to lock me in. I'm just like everybody else. When I know I have more high probability if I wait for a pullback and get more information. All right, so I wanted to show y'all that. That's the news thing and see the reaction of the news. You actually can get a lot of information after the news. You don't necessarily have to trade the news. Now, some people have strategy where they would have known that it was going up, or at least guessed that it was going up. Actually, range. They broke out of the range. They had already took these people's stops already. They was already prone to go ahead and take these people's stops already. So these people was wiped out early. See? Wiped out. And then these spreads is all the way down to right here. So they out of here. All these people out of here. Now they going for who? For these people. All these people. Orders. And that's what they did. Taking orders all the way up. Hurting them. So now that I see that. The first place you would look for the pullback is right here. By then, your EMA will be right here. If it passed that, you got another structure right here. By then, your EMA will be over here. Information stations. Don't make it hard on yourself just because it looked one way, man. Let it have some reason that it's doing that. You know? Go ahead. Anybody want to input? Go ahead.
No, I think it's gonna do that. I think it's gonna do that.
Which one you think is gonna hit the 200?
No, I think it's gonna come down. Because it's kind of overdue.
Yeah.
And then slowly go up to the upside.
I can see that because look, this here swing low. You actually could take the whole thing if you want to. If it did start turning face here. Cause it's not complete yet, cause we would need it to start turning down for a swing high. But look where your 50 and your 6-1 is. It's kind of close to this structure anyway. Matter of fact, that's that right there. Boom, look at that. So look how much confluence we have in this area, which I'm like, Johan, I want to think that it would come all the way. It makes more sense for them to bring it all the way down there as far as possible, right? Without breaking that up stride that they trying to get going and stuff. So I actually think,
I think they do that with the news that's coming up. I think the news can carry so strong right now.
Oh, wow. Ain't that something? Because look, that would make sense, right? You got a little news right here. Get them to sell into it. I don't know, maybe some bad media news. I don't know. We doing bad on natural gas. I don't know. You know what I'm saying? And then it could, test all of this. Cause you still got people hoping and wishing. Fail to make the low. You got to know that this is a nice entry. Well, once it, do its dance and convince you that it do want to go up here. Nice entry to at least go all the way up to the high. And then see how it acts. That would be your first. I'm sorry, y'all. I'm sorry. That would be your first target. Jeep of creepers. Yeah, man. So I get you 120 right there. And then of course you want to see how it act when it get to this point. But again, it's not finished yet. So this is another patient thing here. It's up. Right now, they convincing a lot of people that, hey, they want to go up. Do you know how many people just seeing this saying, man, I don't know if I should get in. I don't know if I should get in. And then as they thinking about it, it goes up. Around by the time they get here and they saying, man, I think it's going to get in again, so and so go up. They're starting to buy. Buy. It would be great opportunity for the big boys to sell. Take all these people orders coming down. Convince them now. Not only convince them, but force them to turn their buys into sales. And convince more sellers to jump in, which is going to fuel them to buy into it and push the market up. Your pain is actually their gain. All these people pain is gonna fuel the market to push all the way back up. If it acts right, you see what I'm saying? But it's got to do all of that. So that's it. That's it for me. Anybody got an input, brother Carl? I hope we didn't lose nobody this morning.
I'm still here. You guys covered so much stuff. I didn't want to add anything to confuse it. Yeah, it's good. I'm good.
Okay. Johan? Any words? Any?
No, that's about the same feeling I have. That's about that.
Yeah. Again, you know, it's getting in where you fit in, man. It's just learning a knack. We giving you tools. You don't have to use all the tools. Me and my dad, we use this analogy about Batman. You know, Batman have his utility belt, and if you know the old Batman, depending on how you know up in age, the old Batman with Adam West, he used to always have the right tool in his utility belt. And then the way how the director show you is you will look at Adam West one time and on his belt is nothing on the belt. But then it'll get to a scene where he need to climb a wall and all of a sudden he has a grappling gun on his belt. And you like, well, wait a minute, where did that grappling gun come from? But in a metaphysical way of thinking, what it's telling you is that Batman is a master of all of his tools on his utility belt. And he only used the tools when it's needed. So when you look at it, us as the viewer, we saying, damn, Batman the man, because he knew he had to climb that wall. I didn't see it on the last scene, but he knew what it was. It's the same as that thing. You will have a whole bunch of tools in your utility belt. It's not for you to get confused or for you to stick your hand in the bag and just jag your edge with one of the sharp tools. It's for you to master your tools and know when to use them when needed. Just like, for example, when I say, okay, it's making an up, I know if I want to pull back, I know to go to my Fibonacci. Why not? Swing low to swing high, possibly. I don't know if it's going to, go. Boom. This is a great projection because we love to mess with the 0561. Good projection for them to do a pullback. Then if I'm not thinking about down and I'm thinking about up, then this would be my ideal spot for going up. Quickly just put it in my utility belt. Y'all didn't see it the last scene, but I got it this scene. You see what I'm saying? And now, what else you have in your utility belt? You have MAs. Damn, the market passed the MA. Boom, boom, okay. It comes down. Even if you would have did this is a failure. This is a failure right here. It's not making no lows. And you got the 14 pushing it up. The market making its way up. Some people wait for that kind of stuff. So, another tool to your belt. Learn it. Practice it. I need y'all to use y'all replay thing too, man. This is a good feature. Because it get to show you. Okay, even if the market is not live, it get to show you, okay, damn, it broke this. It's breaking my MA, right? I need a test from that. All right, okay, they testing. Let's see if it get close to my MA. Oh, bullish. What? Can I get a close above that bull candle right there? Oh, hell, I'm going in. You see what I'm saying? I'm going in. They feeling. Just letting me know that the market going up. So learn that. Use that. And that's it. Rosemary, you got any question?
No. Go in and play around tomorrow.
Play around, play around.
Well, I'm saying that, but I mean, hey, I'm still demoing. I have to do probably in and out.
Yeah, dude, there's nothing wrong with. There's nothing wrong with demoing. You have to demo.
Well, I know. I said I'm going to test myself and see what how I feel if I do it live. I know I might have a different thought process.
Okay.
No, I mean, I could help you out too with the MBAs. If you like. Yeah. And if you're on the same time, I can help you.
Yes, that's another thing. That's another thing. And I'm glad he said that. Listen, Johan is here to help too. You know, he's family, but you should utilize him. If y'all on, man, don't be ashamed to get in touch with each and every one of us, right? Y'all should probably put each other on the contacts. That way y'all will know when everybody is on and stuff like that. Like I got all of y'all on my contacts. Let me see. Go to the thing. Uh-oh. Like I got all of y'all on my contacts, so I know when everybody on and or turn on the computer. Sometimes y'all might not be to the clean, the computer just come on or whatever. But when you gotta get the contacts, and that way y'all don't have to wait for a group session. Y'all can converse amongst each other. That's the whole point of the community, to be honest with you. I want everybody to help me. I was so happy on Tuesday when I came back and I saw the feed, because I, for some reason, couldn't get it up on the tablet. And I saw that y'all was like conversing with each other. And I'm like, I hear somebody, I don't know what that is. But no, it's cool though, but it's cool. But no, I was so happy. So look, y'all keep that momentum, man, because this is what's gonna make us successful. You see, like I can't be on it all the time because I got other stuff going. But the line is open for everybody. You see what I'm saying? Send each other messages and stuff. Ask these others questions and stuff. Dig into each other's brains because we all open here. We all open. Alright, so go ahead. I'm going to go ahead and end this one. Because I don't want it to go too long. Because then I can't really send y'all the file and stuff. But again, man, practice. You know, I appreciate, of course, my dad. Appreciate you. I appreciate you, Johan. You always a big help, brother. Even when I be forgetting stuff, I'll be like, damn, thank you, Doc. You know what I'm saying? I appreciate that. We got to keep this strong momentum going. All right? And for the initiates that's trying to learn the order and whatnot, just keep practicing. Don't get frustrated. It's going to get there. All right, I'm going to go ahead and end this. All right, Uncle Josu Neb, I love y'all. Hit me up when y'all need me. And, what's today, Thursday? I'll see y'all Tuesday. Or if y'all don't, of course, I'll be sending y'all stuff throughout the week. All right? All right, good people?